afternoon, everyone. I'm Emily Chang, host and executive producer of Bloomberg Technology. With so many exciting things happening in the world of financial technology, I am thrilled to be hosting Banking on Digital, the race to transformation. The rise of consumer digital preferences, sophisticated cyber attacks, and increased fintech competition is fueling an eruption of digital disruption in legacy banking systems not seen in decades. Traditional financial institutions will never go back to business as usual. So today we're looking into the future to examine how financial leaders are embracing change through agile adoption. Senior executives from PayPal, Palantir, and more will talk about how the financial industry is evolving to compete for the digital customer. Whether it's utilizing the cloud to navigate data integration, create seamless workflows, or improve security measures, we're going to examine how technology is empowering business innovation and strengthening the human connection. Before we begin the program, though, a few housekeeping notes. This is a virtual event, so please bear with us if we experience any technical difficulties. Refresh your browser if you're having issues with sound or video. Open the event chat box in the bottom right corner if you need support. And for real-time transcription, click the link in the session to open the Thiston page and follow along there. This is an interactive event, and we encourage you to get involved so you can engage with us on Twitter using the hashtag BBG Digital Banking. Discuss the event on LinkedIn, across Facebook, or wherever you'd like to share. And I also want to acknowledge our sponsor, IBM, for making this virtual briefing possible today. Now, to get us started, I want to turn things over to my colleague, Julie Sheriel, Senior Analyst, FinTech and Payments for Bloomberg Intelligence, who will moderate a discussion, Innovation Playbook.
Thanks, Emily. Hi, everyone, and welcome to Innovation Playbook. I'm Julie Sheriel, Senior FinTech Analyst with Bloomberg Intelligence, and I'm especially excited to be hosting this panel today because our speakers really represent some of the hottest trends in FinTech today. First, we have Sri Shivananda of PayPal. He's Executive Vice President and Chief Technology Officer, and he's going to be talking about the emerging importance of a one-stop shop in digital payments and banking, really by way of a super app. Then we have Nadia Hijazi from HSBC. She's the global head of wholesale digital channels, and she's going to speak about the business side of fintech. It's really, the headlines are really so much taken up by the consumer space, but things in business are really beginning to heat up. And then we have Allison Lang Engel. Allison's with Greycroft Venture Partners, and so we'll get to hear from her on what's coming up from the newest crop of fintechs as lots of VC money continues to pour in. So let's get started with our first question. This one goes to all of you, but I'm going to ask Sri if you can start for us. So we've been talking about digital transformation in banking really in earnest since the beginning days of the pandemic. So I'm curious, though, where are we going from here? What's the top issue that you're currently solving for now in your respective areas? Sri?
The pandemic itself accelerated the digital payment landscape. For a long time, digitization has been occurring in payments, but the acceptance and the convenience of paying online and the need to do so became much higher. More and more segments started to use the various methods of paying online, and we continue to see the acceleration. It all started with digital giving in the early pandemic, but then it shifted to shopping habits. And from shopping habits, it's moved on to more and more methods of payment online and a choice for consumers to shop from wherever they are with any method that they want to use to pay.
Nadia, what's the latest in your space on the commercial banking side?
Yeah, so we've seen a lot of activity in this space. And as you said, there's a perception that the challenges is all in the retail space, but what we've really seen is it's exploding into the business banking space. And what that's giving us within the larger banks is this opportunity to take a refresh look at how we do business banking. And that's something that we did a couple of years ago. We're like, let's take a step back. Let's not think about business banking where someone comes to our internet channel and they just do a load of products and services. Let's create a proposition that is about enabling someone to succeed in their business. So we worked on a mobile-first, cloud-based business banking proposition, which really helps our customers all the way from opening an account to applying for lending, credit cards, all the things that they can self-serve themselves, and all things that we wanted to be able to do for them in a few minutes. So get away from this perception of a bank that opening an account takes weeks, and allow them to open an account and apply for an account in a few minutes, or within 48 hours as a maximum. And if you wanted to need a credit card, then apply for that as well. So really trying to create this real-time environment, but then extend it beyond just the normal stuff to help them manage their business, giving them invoicing capability, receipt management capability, and kind of that full suite of capability. And then recognizing that people need to now operate on marketplaces. And when you go onto the marketplaces, you have FX conversion, and that reduces your margin. So how do we give you a kind of global wallet solution that allows you to hold multiple currency accounts, operate on a marketplace? So if you're operating in a euro marketplace, you're not then having to convert into sterling or to dollar or whatever, that you can actually hold the account really easily in a wallet to do business. So it's really helped us digitize and transform the way that we offer our services to our customers, and really targeting at that digital transformation and that move off the high street onto these digital marketplaces and online environments.
Sounds much more seamless for your clients. Allison, what is the latest that you're looking for now when you're deciding on a VC investment candidate?
Sure. I mean, for us, we've been active in fintech at Greycroft kind of before it was called fintech, so going back 10 years. And I think for us, Sri said it, I think the move towards digital products has been here for years, but it's just now completely accelerating. And not only in the US, we see the same patterns around the world. We've been actively investing in Africa and South America, and obviously here in the US. And really what we look for are just those enormous markets, and markets where the status quo can be challenged, where access to certain tools and investing tools and capital can be democratized. And for us, it's really also working with incredible founding teams and teams that are tenacious about pursuing their vision. And I think the most amazing outcomes are when that vision can actually expand the market, when kind of the initial plan even goes beyond what's possible. And for us, what's really, kind of the pattern of success, I think for the last few years is how startups have been able to use data and AI to deliver really personalized products and services. And that's really meeting consumers where they are, because consumer behavior, business behavior, things are shifting so quickly. And so being really agile to deliver transparent, actionable products and services and support, I think is really enabling a lot of the upstarts to, continue to accelerate their growth.
Yeah, really exciting stuff. I want to dig in with each of you a little bit more on what you mentioned. Let me start with Sri. Sri, as you mentioned, there are this increasing number of types of ways to pay, particularly at the online checkout, right? It used to be credit cards and maybe the PayPal button. Right now we have Apple Pay, Google Pay, Shop Pay. We have Buy Now, Pay Later. We have other kinds of personal finance. So the question is, how does PayPal manage all of these different types of payments and serving them up at the merchant and the consumer level? And how do you try to compete with your branded product?
The number of choices that are available for digital payments today are more than ever before. It gives customer a wide range of options and choices. And these options are presented as what's beginning to now get called as a paywall. And in many cases, that paywall actually becomes an obstruction to continue and finish up the intent. In many cases, people end up abandoning what they started. When you look across the list that you shared there are two broad classes. One is wallets, which is the replacement for the physical wallet that people carry. And that contains what we call financial instruments, with a bank account or a credit card or an installment. And these are all various different ways to pay. Just like people don't like carrying multiple physical wallets over time, I think they'll choose one. But the options of paying in different ways in the wallet will continue to remain. At PayPal, we believe that a choice for our consumers to pay with their favorite method of payment, one that is locally relevant to wherever they live around the world, and one that is contextually relevant, i.e. digital cash or credit cards or installments or rewards for our transactions are important. We also think that scale matters. We as a company bring hundreds of millions of consumers and tens of millions of merchants together to transact on our two-sided network. And this allows a level of familiarity. It also allows us to create an unlimited shelf of goods for our consumers. And on the other hand, take any merchant anywhere in the world, small or big, and create global reach for them. Safety and security is very critical, and that matters for every single transaction. And our investment in data science and machine learning has allowed us to ensure the safety of every transaction and avoid fraud before it even occurs online. And this allows our consumers to trust us and for our merchants to count on us to be the experts that invest on their behalf in these areas. And last but not the least, doing business around the world comes with a responsibility of doing right by each jurisdiction. And we have innovated on a platform approach to regulatory compliance at scale. And this helps us to partner with those jurisdictions to help them protect their citizens who are also our customers. If I were to summarize, I would say the barrier to entry in payments has definitely gone down, and therefore we see a lot of entrants coming in. But the barrier to scale still exists. And most of this is going to be how we offer building trust and investments innovation we make in the heavy lifting that happens behind the scenes over time.
Right, so many ways to pay, but also many ways for PayPal to continue to bring value to that process. Super apps, right, are quite a big topic these days in fintech, and PayPal just yesterday rolled out this super app with lots of additional functionality. Explain to us what it means to be a super app, and why do we need this construct in fintech and payments?
When we look at mobile adoption, it has scaled over the last decade. And as that has happened, we've seen a user start off with some number of apps they used to manage to a lot of apps that they have on their devices, leading to a level of app fatigue, if you will. Also, at the same time, the infrastructure has shifted from most of us started on 2G networks and moved to 3G, 4G, and now 5G is becoming available. On an average, the data says that there are about 40 applications on any user's phone today. And this has led for companies to innovate and first consider the concept of app families, where a single company would put out multiple apps to do different things. And now it has evolved into the concept of super apps. This has been popularized by the industry in Asia. And super apps, in my mind, are a customer-centric approach to providing them a service that takes care of the end-to-end experience for an area in whatever that company offers as a service or an offering or a specialization. Think of super app as a platform by itself. It's a bit of an operating system, and it's an ecosystem of utilities that are all bundled together into one hyper-personalized experience. That's what a super app is. One app that gives you end-to-end experience and takes care of all the things that you need to do. At PayPal, our mission is to build financial inclusion and democratize financial services. We want to allow everyone, everywhere to manage and move money safely, conveniently, at low cost. And like you mentioned yesterday, we launched a new version of our app, an all-in-one personalized app that serves the traditional utilities of moving and managing money like we've always done, but adds on top direct deposit, shopping, high-yield savings, deals, rewards, bill pay, crypto, charitable giving, raising funds, etc. The intent is to be able to help our consumers manage their financial life in one destination with a platform they can trust.
Interesting. And so the experience in Asia with Alipay, WeChat Pay, sort of a base case for why you would believe that consumers would adopt a super app.
It is a proven model that we have seen. It has been done in other parts of the world before, and we are seeing a gravity towards the concept. And it's a tried and tested concept that's now becoming more ubiquitous around the world.
Great. Let me turn to Nadia and sort of a similar take around neobanks, right? So you have these online-only banks like Revolut and Starling and Monzo in the UK and Chime and SoFi in the US. They're sort of another form of super app, right? The point is they're increasingly adding services on the path to becoming full-fledged banks, right? They have lower costs, so they can charge no or low fees, and they tend to benefit from less regulation at this point. So the question is, how does HSBC compete?
I mean, I think that at the moment there has been that explosion, but there's also a realization that when you want to be a bank and you want to operate at the scale that we're talking about, you need a lot of infrastructure. You need a lot of regulatory skill, credit risk, balance sheet management, right? And the problem with all of those things is they need product expertise. They need that kind of expertise that exists in the more well-established organizations, and they need a lot of investment. If you look at the investments that the traditional players put into their infrastructure to link into real-time payments, to provide the types of services that really are needed by the customers, you've got ongoing cost around that. A lot of these neobanks and neo organizations don't necessarily have those kind of budgets and investments that they can make into it on an ongoing basis. And they'll end up in a situation where they're going to have to make a decision about, do they want to operate at the customer proposition side, where they're all about ideas, changing the way people do business, changing the way the customer interacts with their products, or do they want to be spending about 70 to 80% of their funds on the capability that's required to make it happen? And I think that's why you've seen now a sudden drive in the embedded finance, also known as banking as a service, where there's a real push within organizations to say, well, look, actually, we've got a huge set of capabilities. And traditionally, you're offering those capabilities to correspondent banking, right? Banks sell to each other, but why not do it differently? Why not take the services and the capability we've got, allow others to consume them via APIs, and therefore you kind of bring the two together. One, it allows you internally to create some great propositions. As I said, HSBC Kinetic, really highly rated by our customers, really look at using this kind of insight actions, real-time capability we're talking about. Well, why don't we expose that for other people to be able to integrate into and to take advantage of? And I think that what you're seeing now is the push into embedded finance is the evolution of the current model. The other aspect to it is even the existing customers, they realize that if you create friction in your journey, and I think that's what PayPal kind of realized with the payment journey, don't create friction in your journey. If you're doing something, let it be seamless. So rather than somebody, I'll give you an example. When you go to buy an ETF on a website, the traditional model was you surfed to it, you had a look at what the investments that were available, and then you had to go back to your banking site to do a bank transfer. At that point, they mainly lost their customers because effectively there was friction in the journey where they had to go somewhere, and people lose interest, right? You get distracted, you procrastinate. Instead, if you put something like a direct debit API embedded into the website of that ETF provider, so the time the customer's looking at it, they make the decision and they purchase, then you've reduced the friction in the journey, you've turned around the sale, but also you've created an engaging customer experience. And I think that's where we're going to see the evolution in this space is, creating what they call these consumable services in this real-time environment that APIs are enabling to kind of create a new, I think, generation in the transformation on the digital side.
Yeah, very, very interesting. The technology, via APIs, is coming to deliver services much faster, smoother, as you said, frictionless. I guess the question is, from the standpoint of your business clients on the merchant side, this is enabling them, therefore, to deliver services faster, to play better in the e-commerce world, to reach a different set of customers better. Is that right? Is that the sort of the pitch to them to help to work with HSBC to implement?
Yeah, totally. So, I mean, I think we were just talking about super apps. Obviously, we're a very well-known bank in Asia. We're very large in Asia. What we do is we provide sets of APIs to integrate directly into the WeChat environment. So when the customers want to access our banking services and providers, they don't have to leave that super app environment. We're actually embedded into that experience and the way we do it. But yes, totally. We're looking, we provide a full set of kind of APIs across all of the range of products that we provide that our customers can embed into their own mobile apps, own portals, to improve their own business. And we've seen a great success. We've kind of we went from being a bank that was, really focused on the digital internet platforms and mobile, and then overnight we saw great success on the API side because there was just so much demand in the market. It was kind of one of those where you didn't really even have to push the door hard on it. The door was wide open. People were looking for that kind of real-time experience because they're all running their own businesses on mobile apps and internet banking platforms. They need that real-time API connectivity to create the experience they want. And they don't want to have to build everything. If you can provide them something, a superset that they can just pick and choose what they want, it's ideal for them because it allows their proposition teams to come up with some great ideas. And it's like, oh, great, HSBC has got that. Let's go speak to them and let's integrate it. And because we're an international bank, we can also provide it across many countries. And what we see a lot in the scaling is people want to be able to grow globally, not just within their own country. So that's really what we're focused on doing at the moment.
Sounds like HSBC certainly catching up to the technologies that we've all come to appreciate, and that the neobanks seem to have gotten an initial start on, but now are facing challenges from lots of different directions. Let me turn it over to Allison, because Allison, you sit in a really interesting seat because you get to see all of the up and coming challengers in fintech and the latest innovations that they've developed. So what are the particular advantages that you see in these smaller companies in this shift to digital banking, and are they able to stay ahead of the incumbents still?
Yeah, there are many of them. It's a very busy landscape. There are new headlines every day. I think, a couple points here. I mean, I think the real headline is what we've been talking about is kind of the race to deliver the single best user experience, something very personal, transparent, that kind of aligns with consumer value, and I would say business values are very similar. I think the advantage is you can start with a dream in a startup, executing that dream and, building a brand and winning market share and retaining users is the long journey ahead, but you can start with a dream and not be wedded to legacy products or legacy ways of pricing and packaging. That said, it's delivering on that. That's the advantage. I would say the other part is for a lot of mobile first, digital first products, they inherently are, very product and user centric, and also have community, especially on the consumer side. And you could also say on the small business side, there's a community component that startups, I think, are excellent at, that traditional brands have less of a go-to-market strategy for. And that community is a huge part of what drives the organic growth in these new products and the viral aspect of the products themselves. And so when you can have more than 50% of your new users coming through a non-paid marketing channel, it's a huge advantage to growth. It takes a long time to catch up to HSBC's and PayPal's scale, no question. But you can scale a business pretty quickly without having to spend as much on the marketing side, assuming you get the product market fit right. I would say, the last piece too is really, the startups are able to move really quickly and kind of have different aspects, different ways of, tapping into new social media channels, really leveraging influencers. They can kind of ride the wave of where consumer behavior and sentiment is going. And that's a key part of building a new brand.
And that's what keeps their costs manageable.
Absolutely. Yeah, it can be a fraction. I mean, in some cases, and some of these numbers have been published, but you can acquire a funded, bank account user, for maybe $10, $20, and it might be 10 or for the traditional banks. And obviously the scale is a whole nother question. What it takes, it's not easy for startups to sustain at a small scale, and you have to obviously have a great product to have retention, which is where the enduring business value comes from. But you can gain a lot of users for fairly low cost.
So given the importance of scale, is the end game starting to switch from what you can tell to eventually being on a track to go public toward more potentially being on a track to be acquired by a bigger company that now maybe is onto the benefits that these smaller companies can bring?
You mean from the startup's perspective, kind of what's the ultimate
from the
goal?
startups, is their end game shifting from on their own to
not necessarily. I mean, every founding team, right, has a different strategy, and I think for most founders, they're in this and working alongside investors, to build the most valuable company possible, right? The company that delivers the most value to the most users. And so, there's a range of outcomes. Obviously, we've seen explosive valuations in fintech across the board around the world. And in some cases, there's questions about kind of where the ceiling, but I feel like we're kind of rewiring all of financial services, right? So we've been at this game for a while, but we still feel like it's very early days, and there's so much innovation to come.
And are there particularly new innovations, new types of companies that are most interesting now? Is there a new wave of fintech innovators?
Yeah, I mean, across the board, I think if you look at every aspect of the fintech value chain, there are dozens of companies in every country, major economy in the world who are competing for market share in that sector. For us, we've been really excited about the opportunity to democratize investing. So we've been excited to partner with the founders of Public, which is an investing app looking to make the public markets work for everyone. And they've put community first. They've been scaling incredibly rapidly and offering a really unique take on investing for both first-time investors, which there's an enormous population of, and people who have felt kind of left out of trading and investing, and then also experienced investors. So we've been making many different investments across the investment industry, and that's one that we think is really exciting and is an enormous market. And again, it's something that Sri said. We also really believe in inclusion, and there are many sectors across the world, across businesses and consumers who have been left out, who don't have access to capital, or if they do, it's extremely expensive and it doesn't help them grow their personal wealth or their business's assets. And so for us, leveling that playing field and having communities also support one another, right? People don't need to be alone in the world of finance. It can be it's always really hard for people, I think, to assess their personal financial choices and for businesses to find the right options. It's never straightforward. And I think a lot of the innovation is making it much more transparent and much more efficient for everyone around the world. And we see it as actually a major driver of the global economy going forward.
Great. To wrap up, let me just ask our other speakers, Sri and Nadia. I know with PayPal has, for instance, PayPal Ventures group. Some banks have dabbled in looking at and acquiring some fintechs. In your world, as you're considering potential buyout candidates, what might you be looking for at your firms?
Yeah, at PayPal, we have a healthy M&A pipeline, and we also have a venture arm. And as we look at companies, the main thing we look for is if someone is finding some new breakthrough innovation towards our mission. Sometimes adjacent capabilities that we don't have today, but we can accelerate our go-to-market in those areas by investing or acquiring them or partnering with them in some cases. In some cases, it's about reach to new consumer groups that we may not have addressed in the past. And in some cases, it may actually be about more efficiently doing something in the payments ecosystem than we have done before. All of that plays a role, and we do a fair amount of innovation in-house, but we are always keeping an eye for smart people in the ecosystem who are making a difference and to see how we can actually bring them into the fold or partner with them.
Yeah, we have exactly the same model at HSBC, looking for exactly the same attributes. I couldn't have said it any better than Sri there. You're looking for people that can complement you, where it's a really good fit in terms of the partnership that will allow you to scale, allow each other to succeed. But really what we try to do is to put the customer right at the heart of it, to make sure that what we're doing is really driving that customer experience and driving what our customers want from us and what they need. So a lot of it is also put into customer testing to listen, right? Because otherwise you become so inward facing, particularly in large organizations. So it's really important to kind of reconnect all the time in whatever strategy you're doing to the customer base to say, what is it you're looking for? What is it you need? We know where we think, but it's more important to us is where do you want us to go with this? And they have some really interesting perspectives in that, and it's the best way to guide your strategy.
Great, very interesting. I would like to wrap it up here and thank our panelists for a fabulous discussion. Everyone have a great day.
Thank you.
Thank you.
Hello, I'm Rob Thomas, Senior Vice President of Global Markets in IBM. And I don't need to tell you what an amazing challenge has been presented to financial institutions around the world over the last couple of years, obviously catalyzed by the COVID-19 crisis and the opportunity that's created for all of us to accelerate our journey on digital transformation. You hear that term a lot. What does that actually mean? I would actually break it down to a few simple areas that really define what becoming digital and leading in digital means. Number one, it's about data. The leaders of financial services in the future are going to be data companies. We've started to see that a little bit in fintech, but it is just beginning. So data will be the differentiator. There was a recent report from IDC that said still 90% of the data in an organization is underutilized or not used at all. There's a huge opportunity for data. Second is automation. We've all started projects around business process automation, RPA. There's also a new frontier of automation, which is AI ops. And how do we bring AI to solve IT problems for an organization? That's the second piece that's coming with digital transformation. Third is security, because whether you're doing data, automation, or anything else for that matter, security is going to be at the forefront. We live in an era where ransomware has become something that happens almost every day, and it's about how do we secure ourselves from the edge back to our data centers, the cloud in between. Security is the board imperative that's happening right now. So think about those three areas: data, automation, security. I think those are going to be the hallmarks of how each of you think about building a digital strategy to be a leading financial institution for many years to come. But there's one more piece, which is hybrid cloud. So how do you connect all of your applications, all of your data sources, edge devices, edge computing, wherever it may be? How do you connect that with a seamless fabric across public, private, multiple public, edge? That is what I mean by hybrid cloud. And I would say it this way: if your strategy is to take everything you have, every application, every system, and put it in one public cloud, then this is probably not relevant to you. But to the extent that you're going to have even more than one cloud, hybrid cloud is a reality. And how you begin to stitch that together in an open fashion will be really the baseline for how you do digital transformation. Because if you think about the areas I talked about, data, automation, security, they live on a hybrid cloud, because by definition, computing, data, applications will be everywhere. So think about this: where you sit today as a financial institution, what you want to be in the future, I think these are the 4 pieces that you have to be thinking about. And you have to have an intentional strategy that's really elevated to a board level for how will we be number 1 in the areas of hybrid cloud, data, automation, and security. I want to thank you for taking time to watch this. This is a wonderful event. I think you're going to get a ton out of it, and I'd love to hear from you anytime. Again, I'm Rob Thomas with IBM. Thank you.
As the financial industry races to compete in a data-driven world, how do you move beyond storing the data and effectively turn rich data sets into actionable insights? In this session, we will explore what technologies are critical to capture data quickly, mine it, and turn it into a story that will boost productivity, improve operations, and seize new market opportunities. For this, I'd like to welcome Ted Mabry, Global Head of Commercial for Palantir. So, Ted, thank you so much for joining us. It's great to have you here.
Yeah, thank you very much for having me.
Now, Palantir's tagline is turning data into insights. Talk to us about what insights you can pull out across how many different kinds of industries.
So our platform is deployed across 40 different industries, and we're really agnostic to both the data type inputs and the ultimate outputs for what you want to do with that data. What we've spent a lot of time doing is essentially synthesizing what are the common problems that are agnostic to every industry that any large institution with a lot of different data that they need to utilize to drive their operations need to have solved.
So tell us about the technology. How do you actually find meaning in that data? Because that's the key.
Yeah, so one of the key things that we learned, and frankly learned the hard way, is that you really need to start with the decisions and not the data. Our experience has been that when you start with data, it almost makes the problem impossible to solve. How can I wrangle this massive complexity? How can I turn that into insight? But then most importantly, how do I turn insight into action? And while that looks like the final mile, we actually found that that final mile was not one more step, it was an ocean to cross. And so really baked into the core architecture of the technology is working backwards from decisions. And how can I work backwards from decisions to find the decision architecture of the institutions that we're trying to serve, and then create the software infrastructure that allows those decisions to scale over time, to happen in more coordinated ways across functions, to create an asset that you can learn from that provides the foundation to actually apply AI in meaningful ways for large institutions. But it really comes back to flipping the paradigm on its head of this is not a data problem, this is a decisions problem.
Now, Palantir has been a fairly controversial company because of privacy concerns. Set the record straight for us. Are you actually taking the data and analyzing data from governments and companies yourself, or are you giving governments and companies the software for them to analyze their own data?
We 100% only provide the software to our partners for them to be able to utilize the software to analyze the data that they have legal access to and control over. So we as Palantir as an institution control no data. We have no access to that data. We cannot utilize any data across institutions. We are only providing software to our customers for them to be able to use that data, as well as enforce the controls that they need to enforce so that they can be compliant with how that data is utilized.
Now, earlier this year, I spoke to your COO, Shyam Shankar, and he talked about how the pandemic was really a shock to the system for companies, governments, your clients across the board. At this moment in time, has that shock been absorbed? What are companies and governments going through right now?
Yeah, it's a great question. I think one of the things I think we're most proud of is that we were able to really help our partners during the pandemic. I think if you look at and ask them how many of their technology investments actually helped them evolve and adapt to that inherent volatility that was imposed by the shock, what we found was many of our customers essentially reverted to turning those software systems off, putting them on the shelf, saying we will return to those. And really in that moment, when the future sort of arrives, you'd expect that your technology would matter most. And I think we're proud to say that our technology did matter most. Now, as that has sort of worked its way through the system and evolved, I think what we're seeing is that people don't want to go back to how it was before the pandemic. And in fact, the pandemic is sort of realizing and revealing to them that that shock is the same shock that they're actually undergoing every single day. And so you have the macro events now, like major supply chain disruptions, major geopolitical events that are reordering the dependencies across their value chains. But also, if you use the analogy of most software systems are helping them operate better in times of equilibrium, and then you had this moment in time that was a fundamental shock. How can I adapt to and treat that moment in time in its specific nature, meet it where it is? They're now saying, well, that same exact dynamic exists for me across the entirety of my operations every single day. How do I treat every single customer as an individual customer, not as an average across a BI report that says this is what my customers tend to do? How do I treat every single situation when I'm optimizing the allocation of my scarce goods in my supply chain for those given customers in that given moment? And so kind of moving from if we can respond in the specific to a nuanced event in time, like the pandemic, I ought to be able to use software and data to respond to every single one of the decisions that I'm making every single day with that same specificity, that same resiliency, and that same adaptiveness to change.
So can you give us some examples of the kinds of problems certain kinds of companies or industries are trying to solve right now and how you're helping them do it?
Yeah, absolutely. So if you take that same paradigm from the pandemic, one of the things that we helped our financial institution partners with was, how can I start to understand risk of an individual customer when all of my underwriting models that were developed and trained on periods of equilibrium are no longer applicable? Well, I now need to take into account a much broader data asset to understand each individual customer in the context of the macro environment that they operate in, whether that's COVID tracking data, being able to use my own internal rich data assets to reconstruct supply chains and trade corridors and see how that reveals in my own data, to enable me to make really specific decisions that helped me help my customers when they needed it most in the context of the pandemic. They're now then looking at that and saying that same asset is actually an asset that I ought to be using in my day-to-day operations. This gives me fundamental insight to use all of the data that I'm collecting to reimagine my value proposition for my customers, for me to be able to reach into my customers and provide them more of a white glove service to help them manage the complexity and risk in their own businesses. And so it's kind of that compounding nature across these things.
Palantir has for so long worked with big customers, pitched itself as an operating system for the government, for example. So big government agencies, big companies. Is that a maturing market for you now, or is there still room there to grow?
So there's still massive room for us to grow. I think we are just scratching the surface of what our enterprise business is going to look like. But at the same time, I think what a new market for us is those growing companies, smaller companies, companies that are essentially defined by their ambition to recreate the world. And what we're seeing is that those companies are starting to adopt our technology at pace, and in fact are able to utilize it with more ambition, with more pace, because they kind of have a different mental model of, instead of saying to the original question, am I starting with just figuring out how to manage complexity, or am I starting with the proposition of how do I use data to create new and novel value propositions? How can I extend credit to underbanked communities by moving beyond the FICO score? How can I do that in developing nations when I need to think about how data can help me operate in different ways? And so I think what we've started to see is, yes, we continue to focus on and invest in the large enterprises, especially the large enterprises that are operating with urgency to solve problems or to reinvent themselves so they continue to be the dominant players in their industries in 2025 and 2030, but also starting to go and find that smaller companies with equal or greater ambition are able to utilize the software and really accelerate their roadmaps and their goals.
Now, big companies, big government agencies have long track records, sort of know what problems they're trying to solve, whereas earlier stage companies don't have long track records. So how is helping a startup different than helping a bigger company?
Well, I think the primary thing that we've observed is one of the dichotomies is, are you focusing on technology to help you modernize, or are you focusing on technology to help you transform your value proposition? And I think we see in the larger companies, there's a lot of effort and a lot of work to go into essentially replicating the existing architecture, but put it in the cloud. I need to modernize the way that I think about data, and I need to do it on modern technologies. The challenge with that is, if you ask, okay, now that I've implemented those things, I've implemented the big data reference architecture for a large institution, you have to ask, is the business different? Is it now going to win in 2025 or in 2030? Or how can you find ways to say, I need to demand more of my data to create new value propositions to continue to reinvent myself? With the smaller company, you kind of have that from the get-go. They are very focused on, they have urgency, they have the immediate need to generate a novel value proposition. But what they don't have is the scale that the large institutions have. And so while we continue to focus on both, some of the more inventive and creative things that we're doing are coming from our largest institutional partners who, one, have the large data assets that they can use. Two, they have the fundamental human expertise. And I think that's a key thing that's underlooked with these things is the most valuable thing that data can do is start to unlock the real expertise of the humans in these institutions. And so being able to turn those assets, data and human, from things that need to be modernized, you're almost fighting upstream against, to how can I unlock them and create new novel value propositions. We're also starting to see an accelerating rate at which our large customers are operating with the same ambition and speed of our startup customers.
So what's your advice to startups now about how to get the most out of their data and when to start trying to mine that data? Obviously, when you're working at a startup, you've got a lot of different priorities, a lot of different fires you're trying to put out at any given time.
Yeah, well, I think you sort of hit the nail on the head of the key thing is that data cannot be an also-ran. If you're treating data as something that is one of many things to do, or you're essentially saying, well, I ought to implement that same reference architecture that exists in well-developed industry, it's always going to be secondary because it is of secondary importance. When you're treating data only as something to be managed and analyzed, instead of something that is fundamentally the fuel for, is my product good enough? How can I make my product better? Am I communicating that effectively to my customer base? How do I do that in a compounding way? Those things have to be inextricably linked. And if they aren't inextricably linked, well, then our software is probably not the right fit for the business that they're trying to build.
Now, is all data actually useful, or is some data meaningless? I mean, do you ever get your hands on data or help companies get their hands on data that they then throw out because they don't need it, ultimately?
I would say that the substantial amount of data is utterly useless. And I would even go further to say a substantial amount of insight is utterly useless. And so a lot of times the data, you just think about the complexity of it, and I'll give you a concrete example of if you say you're trying to make a field force more effective in running a more reliable telco network. And that telco network, when someone comes to your house to say, you know, my cable's broken, my internet is down. Well, there are about 10 million reasons that that could be caused. And a lot of the times I'm going to send someone to your house to fix something that isn't broken because it's somewhere else along that chain of dependencies to get you reliable internet. Now the data there, so you're saying I want to evaluate the context of how effective is my field force in that case. And a lot of the times they're going to fix things that aren't broken. How are you going to measure their effectiveness? How are you going to measure the quality of their training program? How are you going to measure which teams are more effective under which context? And so it kind of comes back to really focusing on what are the decisions that are being made? How do you get the data that is required to make that decision into the hands of the operator at that point in time? And how are you very thoughtful about structuring the output of that decision to create an asset where that data is, one, useful, two, not going to lie to you over time, and three, actually fuel learning that is meaningful in the context of your operations?
In that case, there is a lot of concern about companies collecting too much of our data. Facebook and Google, for example. You have regulators scrutinizing this stuff around the world. Do you think companies like that should be scraping less from us, should be collecting less about us?
So I'm really only focused on what we're doing, and I think there are things there that are broader societal questions that should be decided by broader society about what those things are, making sure that it's very transparent, why the data is collected, under what purposes, how it is used, making sure that there is the demand on the technologies to implement those controls where they are fully transparent and auditable. But we're really focused on helping our partners utilize the data that they have access to that is obvious that they can create better value propositions for their partners.
How important is AI to Palantir and informing the software that will enable a next generation of insights?
So it's incredibly important. We really view it as an asymmetric technology that has the potential to fundamentally transform the way that institutions operate in the same way that nuclear energy could totally transform the defense space and power generation broadly. That said, I think we're very much in the early innings of it, and really treating it on the outside of the core decisions that institutions are making. So a lot of the ways that AI is being practically applied is starting with the question, kind of going back to my original statement of, where is there data that might support me being able to train an AI algorithm? What could I get? What kind of predictions could I treat from that data? Okay, now how could I apply it to my core operating principle as a business? And again, at that last moment, you sort of see that, gosh, this isn't that useful. A churn model is very difficult to apply to an operating business with any positive economic return, no matter how good that model is. Same thing with a predictive maintenance algorithm for an engine on an aircraft. You really need to think about meeting the institution where it is. What is its core mission? What is its core value proposition? How do you help the people who are just making decisions that define that value proposition now, informed by data, such that I can start to generate the data to use analytics and AI to help them make those decisions in a more effective way and really go inside out from the core value proposition versus outside in with how can I apply this novel technology.
From a market perspective, you got a lot of investors making a bet on Palantir and this future. One of them is Cathie Wood. Her ARK Invest has a stake. She has a huge retail following. Palantir now has a huge retail following. It's kind of become a meme stock, at least on certain days. Has that been helpful for sales? Has that been a surprise at all as somebody who's operating within the company?
I think everything that happens to us in the external world tends to be a surprise because we're so internally focused. But I think one of the things with our investor following is that we tend to be very respectful of them. And when we see and we talk to the folks in the quote unquote like retail space, they tend to have done significantly more work and actually understand the fundamental value proposition of what we're doing at an intimate level. I think that tends to be tied to our software is really deployed in a heterodox way versus what people expect of SaaS software, with how we've developed it, what the trajectory of the company has been, how we think about it from a decisions versus data point of view. And these are all things that folks who have an outsider's view on just does this make sense versus how well does this adhere to what I expect of a traditional software company tend to actually be willing and capable of learning the things that are actually most important about what generate novel value for Palantir than folks who are coming at it from a, how does this fit into my institutional mindset of what I expect.
That said, are there ever any concerns that having the retail interest could be a distraction? You know, for example, on GameStop, on any given day, it's way up or it's way down. That's not necessarily good either.
The missions that we're supporting with our customers make it very hard for us to have any plausible belief that we'll be distracted. When you're focused on staying up all night to figure out how to bootstrap a vaccine distribution network in 4 weeks, you're not looking at the stock price. You aren't looking at Twitter. And our institutions and our partners, the people who do the most important things in the world, they consume us basically in our entirety. And so we remain very focused on just how can we help them. And then on the broader markets, you know, the chips will fall where they may.
On that note, then, there is so much data that's left to be analyzed, and I'm sure a lot that will be thrown out. But as we learn more about kind of the information we already have and the information we'll be able to collect over time, how do you think that'll change certain industries over time? Like today, we're focusing on fintech, for example. How will the finance industry be different 5 to 10 years from now because of what we can learn from what we're already gathering?
Yeah, well, my expectation is that it will be fundamentally different. And I think what you've seen sort of emerging over the last several years is the institutions that are able to use data as fuel for their value proposition versus just exhaust of something to be managed and analyzed have created fundamentally asymmetric returns. It started in the consumer internet, where from a data perspective is actually a much simpler problem. You can define the entirety of your data model. It's very coherent. It's only in that digital domain. But you see the institutions that are able to do that create products that create compounding data assets that are essentially unassailable and nobody can replicate, start to create essentially monopoly returns for themselves. We started to see that move out of the consumer internet into something like the automotive space, where Tesla is able to use data as a fundamental driver on a continuous basis for the product development. And you can see the returns and the sort of rate of innovation happening there. You're starting to see this in the financial services space as well, with the fintechs that are starting to create real scale, because there's a huge amount of opportunity between how data is used to generate value and products and services for the lion's share of consumers, and the potential of what that data could do to create more personalized, more robust, more secure solutions for those customers. And if you don't get on that train and you think, let's work backwards from 2025 or 2030, what is this industry going to look like? Is it going to be led by the folks that are using data in this asymmetric way? And our expectation is that it will, and we're very focused on helping our partners be those companies that define this industry in 5 to 10 years.
Fascinating. Well, since we started on the pandemic, I'd like to end there because Palantir is one of many companies that have moved their headquarters as a result of the shift to remote hybrid work, the tumult that the world has been through. Palantir moved its headquarters from Silicon Valley to Denver. You moved from New York to Denver. I'm curious what that transition has been like for the company. What has been gained? Do you feel like anything's been lost? Because we have so many people in our audience right now who are thinking about making the same changes and considering the same potential compromises.
Yeah, so Denver's been great for us. It's been great for me personally. But we as a company are also tend to be, we go where we need to be. And I think the vast majority of our employee base tends to be very close to our customers, making sure we intimately understand what their problems are and how to solve for them. And so that hasn't really changed. The fact that we now need to do it through a screen has created fundamental challenges where I think we've been very proud with the ability that we've been able to operate extremely effectively in time. But one of the biggest challenges and things that we're working at every day is that it is much harder to create the creative environment, the idiosyncratic discovery of new novel people, new novel genius in very spiky ways when you're interacting with the same people through a wall of meetings on a screen. And that is both internally with how do we find the next great software developer who's going to come up with an idea that fundamentally alters the trajectory of our product, as well as do we actually intimately understand our customers' operating environment, not the software we want them to use, but the software they really need to achieve their mission. And I don't think there's any trade-off for being there in person to be able to discover that.
But this is the new normal, right, in your view? And we'll find ways to muddle through these challenges for years to come?
I think we'll find ways to muddle through them, but we have to fight for the things that we've lost as things change and be really honest about that.
All right, that's brutally honest. Ted Mabry, Global Head of Commercial for Palantir, thank you so much for joining us and for sharing all of your insights with us. I know our audience really appreciates it, so appreciate you taking the time to join us today.
Yeah, thank you very much for having me. I had a great time.
Thank you all so much for joining us for Banking on Digital, the race to transformation. There are so many exciting things happening in the world of fintech and so much more on the horizon. We hope you enjoyed the discussion. We welcome your feedback as always, so please write to us on Twitter. Again, the hashtag is BBG Digital Banking. And thanks again to our speakers and to you for being such an engaging audience. We also want to thank IBM for supporting today's event. For more information from IBM, please visit the resources tab on your screen. A replay of today's event will be available at BloombergLive.com along with an event highlights article. Enjoy the rest of your day.